The world of investing can be a jungle. Bulls, bears, and Dirty Gary Genslers. There's danger at every turn, but there are no monsters in the investing jungle more dangerous than the dreaded Jim Cramer, the host of CNBC's Mad Money. He's notorious for being the most terrible stock picker known to man. Let's take a look into how dim Jim really is. Let's get it. Welcome to BitBoy Crypto. My name is Ben. In this video, we're going to skim the stock sheet and show you some of Jim Cramer's worst picks of all time. I got to say right up front, when our research team started really looking into this, it got downright impressive. Jim Cramer said the Tesla IPO was not a smart investment.
But after it comes public, listen, Tesla's a sell. You don't want to own this stock. You don't want to lease it. Heck, you shouldn't even rent the darn thing.
Wow. I mean, this guy has an entire ETF dedicated to inversing his stock picks. He even told people to sell Stark Industries and Iron Man.
Stark Industries. I've got one recommendation. Ready? Sell. Abandon ship. Does the Hindenburg ring any bells?
James Joseph Jim Cramer, Lord of Cramerica, is a TV personality, author, entertainer, and former hedge fund manager. He's currently the host of Mad Money and an anchor on Squawk on the Street for CNBC. Cramer started seriously investing in the stock market while in law school. He made enough trading to cover his tuition and started leaving stock picks on his answering machine, which is totally in keeping with Jim's low-key, well-adjusted personality. After earning over $150,000 in 2 years, Cramer graduated in 1984, went to work at Goldman Sachs instead of practicing law. In 1987, Big Jim left Goldman Sachs and started a hedge fund, Cramer and Company. Cramer claims that from 1988 to 2000, he only had 1 year of negative returns, 1998, which in fairness to Jim is extremely impressive. Cemented his reputation as one of the best fund managers on Wall Street. His reputation has changed a lot since then. We'll get to that in a minute. 2001, Cramer retired from managing the hedge fund, and after years of being a frequent guest commentator on CNBC, Mad Money with Jim Cramer first aired on CNBC in 2005. The show's stated goal is to provide retail investors with the knowledge and the tools that will empower you to be a better investor. Respectively, I think he's provided them with a steaming pile of something else. Cramer is required to disclose any positions he holds in a stock that is discussed on the show and is not allowed to trade any security he's spoken about on CNBC for 5 days following the broadcast. Or at least, that's how it's supposed to work. We'll get to that in a minute too. Now, this is the part of the video where I would usually stop and say that I'm not affiliated with Jim Cramer or his show and that I've never accepted any money from him or any of his businesses. I tell you that the information in this video is for educational and entertainment purposes only, and that nothing I say should be considered financial advice. I'd ask you to please do your own research, and so on, and the usual. But this video is about Jim Cramer, so this time I'm just gonna yell, do not take investment advice from Jim Cramer.
I mean, I sold all my crypto. I announced everything on TV, what I did with crypto. But I would not touch crypto in a million years.
Now do you get my point? Okay, glad I got that out of my system. Now that we've covered crash and burn Cramer's origin story, it's time to go over a few of the world's loudest financial entertainers' worst calls of all time. Buckle up. Let's start with the granddaddy of them all. On March 11th, 2008, Cramer said that Bear Stearns is fine and implores investors on live TV to not take their money out. Less than 6 months later, Bear Stearns collapsed, kicking off a financial crisis. Jon Stewart actually found an interview clip where Jim Cramer actually told people to buy Bear Stearns just 7 weeks before they crashed.
Okay, Peter writes, should I be worried about Bear Stearns in terms of liquidity and get my money out of there? No.
Bear Stearns is fine. Do not take your money out. This is real. Look, if there's one takeaway other than a plus 400 somewhere, Bear Stearns is not in trouble. I mean, if anything, they're more likely to be taken over. Don't move your money from Bear. That's just being silly.
Good thing he didn't leave that one on his answer machine, though, am I right? Next up, the Magnificent Seven. No, I'm not talking about a Western movie. I'm talking about a group of 7 stocks Cramer picked in 2022 that were sure things. According to our dear pal Jim, these stocks all had such powerful pull, such irresistible investment theses, and the fundamental valuables and underlying businesses had ceased to matter. And investors simply had to own them based on their name alone. He even referred to something called the metric of wonder as a justification for investing in these stocks. I'm not kidding. He really said that. Sounds more like a meme coin pump and dump than a nationally broadcast financial opinion show.
Now, nothing lasts forever, including the market's love affair with Magnificent Seven. But the bottom line, until we turn the corner in the pandemic, the earnings themselves are simply an abstraction for these thesis stocks, and any disappointment is simply one more reason to buy them.
7 stocks he picked were Netflix, Roku, Tesla, Peloton, Square, PayPal, and Zoom. And since Jim gave them his blessing, the Cramer curse has crushed almost all of them. Netflix down 60%, Roku 70%, Peloton 80%, PayPal and Zoom 65%. Interestingly, Square rebranded to the block, perhaps trying to avoid the curse of the Cramer, but despite their best efforts, they're still down 60%. The only one of the Magnificent Seven that is up is Tesla. But Jim covered himself on that one too by saying on January 3rd of this year that Tesla is not a buy, right before the stock pumped nearly 70%. Man does not miss. Absolutely uncanny. For our next trip down Bad Pick Boulevard, let's skip ahead to the most recent banking crisis and pour one out for all the homies over SVB, which went under on March 10th, 2023. That very same day, Cramer tweeted out, First Republic Bank is new focus, very good bank. Does anybody remember what happened after that? I mean, forget about the numbers for a second, just look at this chart. Timing of this tweet is perfecto. He's not just wrong, it almost seems like his tweet killed First Republic. Almost like God himself was inversing Cramer on this one. Amazing. Cramer curse was so strong here that 11 major US banks funneling over $30 billion of cash to First Republic still wasn't enough to save it. And in a matter of weeks, First Republic was shut down too. For my next pick, I'm going with Jim's call to go all in on the Coinbase IPO. This one stings a bit. As you know, the Coinbase IPO in many ways marked the top of the last bull run, highest fever of crypto mania in the market for the long slide of bankruptcies and bear market bounces that we've seen since then. And what was Jim saying on the day of the all-time high for crypto? We like Coinbase to $475. Coinbase has slid about 80% since then, been hit with enforcement action by the SEC to boot. Finally, I want to call some attention to some interviews Jim gave where he talked about manipulating markets on a show called Wall Street Confidential. The interviewer asked Jim, what's the worst scam on Wall Street that's never been caught? Jim responds by explaining that his old boss at Goldman Sachs had been selling call options on a stock knowing what the strike price was going to be, effectively printing money. In another interview on Wall Street Confidential, Jim talks about how when he ran his hedge fund, he was able to manipulate markets by having either a long or short position on a stock and then leveraging $5 to $10 million of capital to push the market in whichever direction he wanted. He called it a fun and lucrative game. Cramer went on to say, the mechanics are much more important than the fundamentals. Who cares about the fundamentals? Great thing about the market is that it has nothing to do with the actual stocks. What's more important when you're in that hedge fund mode is not to do anything remotely truthful because the truth is so against your view that it's important to create a new direction, to develop a fiction. You can't make this stuff up. Almost sounds like a reference to his metric of wonder. Makes it sound a lot more sinister too. Now, I'm not saying that this is proof that Cramer has or is still manipulating markets, but it is proof that he knows how it works. And trust me, it happens, and it works. People get away with it all the time. It also proves one thing above all, the legacy financial system is a rigged game. And if you take away nothing else from this video, it should be a clear understanding that we need crypto, a system of truth, not of trust. So retail investors never again fall prey to the predators and monsters of the financial jungle. Time and time again, Cramer goes on national television and says the opposite of what you should do. Somewhat of a phenomenon. It's so bad that there's even a Twitter page called Inverse Cramer that promotes doing the exact opposite of what he says. At least some people are in profits, right? Let me know about your favorite Cramer calls down below in the comments. And what's the craziest thing he's ever said? Let me know. That's all I got. Be blessed. Big boy out.